Whenever I got really anxious that I was going to miss a move, or if I was really excited about a particular trading week over the weekend, they were the characters that constantly came up in the play that resulted in me losing. Sometimes losing an entire account. Now, I don't know why when people are new, they come here and they want to listen to me or whatnot. And I'm honest with you and I tell you where I learned from. And it was through pain, it was through adversity, and lots of blown accounts. For some reason, that seems to be like a bad thing for you. Like I would want to learn from someone that has gone through the pain, has lost a lot of money, and learned how to avoid doing that again. That's the person I want to learn from. But unfortunately, that's what I'm trying to tell you many times when I said in this discussion this morning. You're talking about how to trade less. If I wrote a book and it titled it "Trade Less," nobody's wanting to buy that book. Now there might be a little niche market in there because it's my name on it, and people want to hear what I have to say about it. But by far and large, they're not really going to be interested in it unless you know who I am, and you're already interested anyway in the things I'm talking about. You probably wouldn't be a buyer of that book because what is it telling? It's saying something that is contrary to the consensus that this industry has cultivated, which is always do the most, never relent, maximum effort, to quote Deadpool. And unfortunately, in the 3 decades I've been messing around with these markets, I've learned that less is more. And I've also learned that I was prone to over expose myself to risks that I didn't understand or could identify as risk because I was falling victim to the things that I purchased in terms of courses and books and people teaching this and that. And because I wanted to change my life, I didn't want it to be the mundane Michael, the average Joe. I was seeking and pursuing something that was bigger than just regular. I didn't want to be the regular guy. And everything that I picked up, I've always demanded it to be exceptional. And I was very disappointed that everything that I purchased and everything that I absolutely worked very hard by their rules, I followed it by their rules, and it would not work. It would not yield to me the results that they promised. It would not yield a consistency and a visibility to be able to see these things forming beforehand. And it caused me to jump into the very next thing, the shiny new object syndrome. And even in this community, because if I teach something new, I talk about something new, everyone's so quick to let go of what they're already working on that they've had progress in and beginning to see the stages of development that hasn't happened fast enough for some of you. And because it hasn't happened fast enough for you and you haven't had a payout yet in a funded account or hasn't seen a profitable live account yield you a withdrawal yet, you haven't got to that stage yet. It's there waiting to be had, but you haven't got there yet. So you're impatient. And it's easier for you to say, well, this looks new. And everybody's going to be talking about this new thing. So I'm going to be distracted anyway. And ICT is going to be jawboning and going on and on about this new thing. So I might as well just go ahead and chase that because who knows, it might become easier. I might be able to get this faster. And faster is a recipe for disaster. And I was a pellet, didn't even know it. The idea of trying to do something quicker for the sake of getting through it. I want to get profitable. I want to get to a point where I can see the setups form real quick, looking at any time frame. The way you get to that level is constantly exposing yourself to backtesting and watching live price action. You do not get it by overexposing yourself to risk. Because when you incur risk and you haven't learned how to do it properly yet, what is it? What is the subject matter I'm referring to when you haven't learned how to do it properly? Well, there's a number of things that encapsulate the it. It's number one, mastery of yourself, because you're never mastering the markets. I have not mastered the markets. I may look very, very versed in executions and managements and whatnot, but I still, and I can tell you that there's about 8 times this week that I would have lost. Whether it would have been a demo account, whether it would have been me calling it out in Twitter, if it would have been me doing it with a live account, I would have taken 8 losing trades this week. And it would have been no fault of my concepts. It would have been me trying to do something that I am, as a human being, prone to do. So when I say that, that's not a weakness, that's a strength. But because when I was a 20-year-old, I viewed it as a weakness. I viewed it as, I would lose on a trade and I think, okay, this makes me poor as a trader in every sense of the word. I have less in the account if I had the account remaining, or I'm less inclined to chase the next setup because now I'm scared. I don't want to incur another loss because I didn't come from money. And when I would take a $300, $400, $500 loss, those hurt. That was a big portion of the account that I was working with. And it took a lot for me to get these couple $1,000s scraped up to refund an account, paying exorbitant amounts of fees and paying for all the little bells and whistles for the data and the software programs that I was trying to constantly build up, and working with a desktop. And I see these people talking about it in their little fake documentaries. For the record, again, because there are people out there that try to say I have multiple laptops and they're all sitting in front of me, and I'm buying in one account, going long, and going short in another. I have one laptop, folks. I have one tablet. I have 8 monitors that runs on one PC, one tower. Okay, and I facetiously mentioned, like a backhanded remark in the interview with Corbs. I said that my laptop died. I had a Hewlett Packard. Okay, I had a desktop PC, and I had one computer with one big old monitor that literally is the size of a Yeti cooler. Okay, I'm trying to talk in terms where the younger crowd can kind of envision what it is I had. But I had all these things that I thought were high technology back then. And I guess in a lot of ways they kind of were. But today, you can do a lot of these things that we were trying to do and hope to do on your cell phone. And that's not the idea you should be trading your cell phone, but you have more power in your cell phone to be able to pull up data, switch to one web browser tab, and have a multitude of things at your fingertips. And it's like a candy land right now of just going in and gathering information, collecting data. But that same thing is also overexposing yourself. Looking at too many markets, looking at too many things that's going to complicate. I can teach you intermarket relationships. I can teach you intermarket analysis. I can teach you the characteristics that one market will lean upon on another. Okay? And I can do it in a wide array of ways where I can show you every instance of how a market will influence a commodity, or a commodity may influence a specific market. An interest rate will affect this market. But that interest rate, that bond reaction, 30-year, 10-year, or 5-year, isn't always going to be mark to market, meaning that it's not going to be instantaneously the opposite, or the effects of what you would expect in like SMT. There's a little bit of a delay that sometimes occurs with the interest rate markets, which makes it a little bit more complex to teach. And frankly, the way the world is right now, it's a market I would not want to touch either. And remember, I said I was leaving Forex years ago, I haven't been touching it. I went back to futures trading. Now, my heart is in the bond market, but I also am aware that that risk is high in the interest rate market because there could be a interest rate implosion, and it could happen instantly, and it could harm me. So what I'm doing is I'm focusing on a market that I trust, which is the index futures. I'm looking at a small universe of investment vehicles, meaning I'm only concerned about the S&P 500, the Dow 30, and the NASDAQ 100 composite index. That's it. I don't need the dollar index to trade any one of those. And to further simplify it, I don't trade the Dow. So what am I limiting it to? I'm looking at just the SPOOS market, which is S&P 500, and the NASDAQ composite index. And because I want to be in the market that's going to move faster, that's going to be exaggerated in its price swings, so what have I further done? I've reduced it down to just one market, referring to S&P like I would do what? The dollar index for a Forex pair if I was trading euro or cable. So I've simplified my observations in the marketplace. I've reduced my time in analysis. I could care less what all these other. I only do that because I'm teaching you, and I know there's a lot of interest in all the markets, and you all want me to do even more than that, and I don't have an interest or time to do it. But the things that I do in those respective markets, they're the same things I'm doing in any market I'm trading with, because it's not changing. The method is not constantly morphing into something new because I'm following another market or following another asset class. So overexposing is trying to do more than it's necessary, trying to find more setups than there really are there. And let's make a distinction between what I just said and what you're probably thinking. ICT, you said you can trade every hour candle and find setups. Yeah, I can. But just like I understand that my audience that's listening to me, I have a great deal of influence. And that's very intimidating for me. Some of you think that I like this position. I can't wait. There's 3 weeks left and I'm done. 3 more weeks, I'm not on Twitter no more. And this level of influence I have over many people who have a high regard of my opinion, a high regard of me as a person and the things I'm openly sharing and for free and helping other people. That influence, that power, it scares me. Because I know what I was like when I was younger. And if I had Larry Williams constantly at a fingertip pushing a button, let me go see what Larry Williams is saying on his Twitter right now. At the moment, whatever musing that he had in his head at the time, if he's willing to share that, that would have been highly influential to me and me taking on monetary risk. Now, would he think about that level of influence and be guarded in his opinion? I don't think so, because he was making his daily, and I think he probably still does. I'm taking a great deal of liberty saying that. I don't actively follow what he's doing, but at the time when I was a younger guy, he made his S&P calls and maybe bonds and whatever else he would talk about at the time. And but you had to pay it through a 900 number. Okay, fine, whatever. But it was behind a paywall. I'm not behind a paywall. And I don't know the level of your experience. I don't know what you know about what it is I've taught. I don't know if you're a gambler. I don't know if you're reckless. I don't know if you just blindly follow anyone that says anything and you're highly influenced because you're just looking for any reason to scratch that itch. And because social media is what it is, it's an invitation for disaster because people that are not equipped to think independently for themselves. It's a wonderful grocery store for you to go out and pick the right person you think you should follow blindly. And I don't want to cultivate that. I don't want to have that in my students. I want my students to be independent. I want all of you to come to the conclusion that you don't need me. And my feelings are not going to be hurt by that. That's exactly the end game. That's the result that you're looking for, not the tetheredness of me and you together. And some of you see that as that's a problem. When that's just you growing accustomed to me as the man, the figure, the person behind the ICT, the inner circle trader. You've grown accustomed to that person. And while that's wonderful in a lot of ways, I'm not that person for you as a mentor. The mentor in me is saying, you have to get out of the nest. You have to do this on your own. You have to fly on your own. And you shouldn't be afraid of that. You should be looking forward to it. It's not a tragedy. It's not it's not a drama that brings sadness. It should be like, this is graduation. And graduation may be fun for the moment, but it's scary too, because you have to go out and do these things on your own and get new experiences without the hand holding. The everyday processes of being around your teachers and your other classmates, which makes it feel more comfortable. Even though you probably hated going through school, as an adult, 2 years out of school, you probably thought many times, man, I'd love to be able to go back in school. I won't have to deal with these adult problems. Well, that's many times the same things that we experience as traders. It feels fun when you start to learn something new, and your energy level is really high. Like if I went out there and said, listen, 2024, I'm doing a mentorship. It's 100% free. We're doing it every day, Monday through Friday on YouTube. We're going to sit down. I'm going to go over my charts. I'm going to draw the charts out every single day. And I'm going to sit down and I'm going to trade in front of you live every single day, the morning session, the afternoon session. Your activity level and everything else would completely stop. You would be making changes in your jobs. You'd be making changes in your curriculum at school and university. You'd be telling your spouses, listen, it's worth divorce. Everything's going to change because this is the opportunity that I knew would never likely happen, but here it is. He's doing it. And your energy level would go through the roof. Why? Because you see that opportunity to do more. And when you finally get to the point where you know how to trade, that shouldn't be like that. See, you think that it should be just like that. When I learn how to trade like ICT or ICT's best students, I'm going to outperform and I'm going to do this and this and this and this and this. None of my students with this new power they have thinks of their trading like that, because they know they don't need to do that. That promotes overexposure. It promotes greed. It will invite fear, because what you'll end up doing is you'll fear not controlling yourself. You'll become reckless, start making mistakes. You'll disassociate yourself from the model and the approach, and you'll revert back to retail processes, which is fear and greed, and analysis paralysis. That's retail thinking. In encapsulated form, that's it. So preventing overexposure is paramount. I knew when I gave the analysis before we started trading this week, I said, I'm going to put a limit on what I'm willing to wait for. And if I don't get this, I'm okay with not taking a trade. All week long, I'm comfortable not taking a trade.